Good morning, everybody. Hey, welcome to Monday. Hey, what is it? February 10th. We get started today as we look at what's happened in the marketplace. Last week was such a run up. Dave and I will talk about that, I'm sure, a little bit more. But remember those danger zones. What is a danger zone? 10 years prior to retirement, 10 years after retirement. If you misstep in that 20-year time frame, it could play havoc on your retirement. To find out if you've planned properly, give us a call for our financial x-ray, 863-382-0037. That's 863-382-0037. Do it right now. Let's get a second look at your current portfolio. Hey, Dave will be with us here in just a moment.
I didn't forget. I had a telephone call from a caregiver. 105.7 Light FM. Good morning. It's 8:39. We're going to check in on your money with somebody that's far more prepared than I am. Phillip Statler is down at the offices of Statler Financial Services. I'll bet you thought I died back there for a second, Phillip.
Man, I wasn't sure what happened there, Dave. It's like, okay, I like the music, and I was getting ready for the drums to go, but I'm thinking, okay, Dave, I hope you're still there somewhere.
Oh, yeah, Gladys's caregiver company called me with about 20 seconds left on the record, and somehow that takes precedence for a second, so here we are. We are checking in on money. We are checking in on Wall Street. And yes, and Friday was not a pretty day. 277 points down on the Dow. You're kind of thinking a combination of profit taking and the fact that China said they're close to 1,000 people dead from the coronavirus, aren't you?
Yeah, I think it's a combination of the two. I mean, let's face it, Dave. We had a heck of a run up Monday through Thursday, and so I got to think people were thinking, okay, I don't want to be holding going into the weekend, given what happened last Friday.
Well, that's always wise when you've got a ton of money to throw around and you can do it without incurring brokerage fees. Taking it off the table over the weekend and putting it somewhere where it goes nowhere for a couple of days while you can't touch it probably makes good sense if you're doing a lot of serious hedge fund work, right?
Well, it probably does. And so I think that plays more into it than anything. And then today we've got kind of a mixed day as we get ready to start.
Yeah, when we first got on the phone before we went on the air, I looked at it and said, this looks like a hangover day, like 1 point swings in two of the three major indexes. It's like we really don't know which way we're going to go this morning, and nobody's really making a move.
Well, yeah, except for as you and I keep talking, I don't think it's us doing it, but the red continues to come out.
Well, we don't like it being us. We take credit when it goes green. We don't when it goes red, do we?
That's right. Absolutely. I agree with you 100%.
Earnings season continues, and we do have a bunch of stocks that might move the market. And one of them that hit the top of my big winners list this morning was Elle Brands, that nobody's ever heard of under that name, but you'd recognize Victoria's Secret, wouldn't you?
Yeah, you would. And so Elle Brands is the owner of Victoria's Secrets and not Bed Bath & Beyond, but Bath and Body Works.
That too.
Yeah, the soap and lotion place that's in the malls.
Yeah.
So they own both of those. But Victoria's Secrets has been a drain on Elle Brands here the last couple of years. And so they've decided, I think they want to try to sell it. So they're in talks with a private equity firm called Sycamore Partners to see if they can work out a deal for them to buy Victoria's Secrets. And it has something to do with the CEO too, and getting tied up with Epstein and that whole scandal too. So there's a lot of factors going into that. And so Elle Brands is seeing a big bump today, hoping that they're going to see that sell off of Elle Brands. And I'm sure they're hoping the CEO is going to go away too. That will help them overall. So they're up almost 7% this morning.
Yeah, I was going to say it's a big mover. I was hoping it indicated a good quarterly report, but I'm refraining from any lift and separate puns about what they're doing to Victoria's Secret and Elle Brands.
Oh, Dave.
We're just going to stay away from that one. Other reports that we got coming out this morning.
Oh, so we've got the drug maker Allergen. They came out. They beat substantially by over 70 cents a share. Revenue beat Wall Street also. They had help from better than expected. They're a specialized therapeutic and and their general medicine sales. So they had a really a good quarter. Uh, they're up a little bit. They're up about 0.5%, but at the rate they're going right now, Dave, they will open at a new 52-week high.
That's the pharmaceutical industry in general. One good bit of news can really move a stock heavily, can't it?
And it can do the opposite also, Dave.
Absolutely.
Just
I noticed that Eli Lilly is one of the ones that are going the opposite direction this morning. I don't know what the news is, but it occurs to me that there's not a sector drag going upward on that brand.
Well, here's what happened to Eli Lilly. They and a partner called Gentek had an experimental therapy for one of the rare forms of Alzheimer's,
Hmm.
and it missed its primary goal in the study. And you know what happens when you miss your primary goal? You start to get beat up a little bit. So they're down 4% this morning.
Yeah, that's kind of the tail of the tape. You get good test success and your stock goes up. You get one bad test and you can lose 5% of your value in one futures session.
Absolutely. It's just one of those things. I think pharmaceuticals, when you talk about the R&D and the development stuff, it's a crapshoot, right? You don't know what you're going to get, and it's a long process. So it's just one of those things when it comes to pharmaceuticals.
Yeah,
You're really betting and gambling. Um,
over time, big pharma has not been a bad investment target, but day to day, it really is. It's like a one-armed bandit. Pull the trigger and see what happens.
see what happens. You're exactly right. So on the other front, we've got another company, and I'll tell you, when I saw the company name, I don't know who this is. It's
Hmm.
called Edgewell Personal Care. EPC is the ticker symbol, and they make Schick razors. So once you
Ah,
see, they make Schick razors, as I understand what they do now, they had an extremely good quarter. They were supposed to come in at like 29 cents a share. They almost doubled that. I mean, they came in at 55 cents a share. A great quarter for them. Revenue also exceeded the estimates that Wall Street had, as well as they've taken their full year guidance and they've boosted it also. So a lot of things there to get excited about when it comes to them. They're up. Oh, I'm sure this isn't on your list because it's one of those more obscure stocks.
yeah,
It's
it's
up
not a big
almost
company.
yeah, it's up over 24% this morning.
Wowzer! My eyebrows are going up because, quite frankly, I haven't seen a Schick razor in eons. But evidently, they're placing them in the right places, right?
Now, I guess so. I mean, one of the little things that said in the news release was that they had ended its agreement to buy the razor maker Harry's. So that may be helping some too.
Okay. Yeah, the one bit of trivia I know is Schick were the people that invented the electric razor 100 odd years ago, and that's the only thing I know about the company. But evidently, they're still in existence and doing okay.
Yep, they are. So good things happening there. We have uh, restaurant restaurant brands.
Yes.
Now we don't have any stock price on them other than what it closed out on Friday because they are a Canadian-based company, so they're on the Toronto Exchange. But they had a good quarter. They beat by 2 cents a share. Revenue was above forecast. Also, they had a few issues though. Tim Hortons and Burger King weren't helpful in the bottom line. They actually took away a little bit. What really propped them up was Popeyes. They had a bump of like 42% in their Popeyes chain. So a big help there for restaurant brands.
I wonder if that has anything to do with store openings, because if the reactions to a Popeyes opening up is anything like what happened here in Sebring when they first opened up, a new opening there can bump a stock price.
Yeah. Oh yeah, definitely can because it's more chicken going out the door, right?
Absolutely. I didn't realize that Popeyes and Burger King were co-owned, so that's news to me.
Yeah. So the last thing I got to go, and it's not an earnings report, it's a China report basically, or Asia report, right? Mattel. We talk about Mattel off and on over the years, and they're shutting down 2 factories in Asia, and will close another one in Canada as it seeks to cut costs. This is not related to the coronavirus. It's cost cutting and streamlining, and so that's got them trading down 1.6% this morning.
Yeah, that zero-sum toy war between Hasbro and Mattel you and I talk about, for the last little while, it's been Mattel on the losing side, hasn't it?
It has been. Yes, sir. It sure has.
And the law of averages, it'll probably turn before long, but hopefully Mattel will survive long enough for it to turn. Resetting the table this morning, like I said, it was an off day on Wall Street on Friday, mostly, as you say, Phillip, profit-taking and the scare over the coronavirus. Dow was down 277 points. That was almost a full percent on Friday. NASDAQ down a little over 0.5%, and the Standard & Poor's also down by a little more than 0.5%. You were mentioning that we were trending downward. I'm still showing a little green on my delayed quote. I'm just betting you're going to give me a little red ink now 45 minutes early. Am I guessing right?
Yes, sir. Ever since I've started watching this thing at about 4:30 this morning, it has been sliding, and so we've got it sliding. It's pretty red right now. The Dow's down $53, about 0.2%. The S&P's down $3.60, about 0.1%, and then the Nasdaq's basically flat. I mean, it's a little pink right now, down $6.62. So everything right now is looking like it's going to open to the downside. We've got gold and silver. Gold's basically flat. I mean, it's up 0.2%. Silver's up 0.5%. Crude oil is down almost 0.5% to $50.11 a barrel.
Memory serves, I think that's about where we were on Friday morning, though, so we're kind of getting into a trading range, it sounds like, on crude oil. Am I remembering correctly?
Yeah, we were somewhere in the very low $50 range.
That was kind of what I remembered, too. Overseas markets, Asian Rim responding to the coronavirus reports that almost 1,000 people now dead in China off of it. Everybody trading down around the Asian Rim. Europe following suit on that. They're down, but nowhere near as bad as Asia is 45 minutes before we start throwing real money around. Phillip, this is probably a good case point. Don't count on the stock market consistently going up. You can't count on it day to day. How do I get a hold of you to get a little bit of stability in my retirement accounts?
You know, Dave, one of the things we talk about is the danger zone. 10 years prior to retirement, 10 years after retirement, that is the danger zone, that 20-year time frame. Man, if you make a misstep, it could mess up your retirement. Give us a call at 863-382-0037, and let's go through our financial x-ray to make sure you don't have too much risk. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back here again tomorrow morning on Light FM. Phillip, thank you so much. We'll catch you tomorrow, all right?
Sounds good, man. You have a great day.
You too, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that.
Hey, folks, I want to thank you for joining us today. I hope your day is off to a good start, and I look forward to speaking to you again tomorrow. Remember the danger zone. If you're in that danger zone, it's vitally important you get a financial x-ray. Call us right now to schedule yours, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.